24 hours with JB. Let's talk. This is the last full trading week of the year. After this, next week will be broken up due to the holidays, and then the following week will be broken up due to the holidays, and then we kick off the 2025. So today I learned about the book value per share. And I was stuck for a minute. I'm like, yo, what is the book value per share? I'm like, damn, what? I know what book value means. I know what per share. And then I wound up putting it together, doing my own research. And essentially what I got from it is, so you would have to check a company's prospectus to understand what the book value per share is, right? And the reason for that is a lot of people don't look at the book value per share. They mostly look at the current stock price, right? But if the current stock price is trading at, let's say, $150, conversely, the book value per share is trading at $25. What's the reason for the gap? That's what I kept seeing as I'm reading this book, The Intelligent Investor, right? He gives out the income statements, right? Cash flow statements, like different statements throughout the company. These are statements that involve revenue, net income, dividends, EPS, which is earnings per share, PE ratio, all of these things, right? Essentially, they're accounting statements. And as I'm viewing the accounting statements, I keep seeing book value per share, book value per share. I'm comparing the numbers, compare and contrast. So then I'm like, yo, what exactly is the book value per share? And when I did the research on it, I'm like, oh, so basically, if a company is trading at $125, that's the current stock price, right? The market value, you would say. Whereas if you check the company's prospectus, and what's the company's prospectus? Great question before I even get into that. That's why this investment thing could be slightly tricky, and I see why people get discouraged, because oftentimes you don't know the vernacular, which is why I'm here, beloved. So a prospectus is basically the financial numbers, right, if you will, of a company. This gives you a breakdown of everything that's taking place in the company for X amount of time. You know what I mean? Usually you go back 2 years, 3 years, 4 years, 5 years, and beyond. So that tells you overall, not what the company's doing now, not what the company did last month or last year, what the company has been doing for quite some time. And this gives you a much detailed analysis on the trajectory of the company. So in other words, you have more insight. You see where the company came from and where it's going, right? So with that being said, it's imperative to look at the book value per share as well as the current stock price. Reason being, the book value per share is what the company would get if the company were to liquidate its shares, right? Why that's important is because that's essentially what the company is worth. In addition, the prospectus, it gives you, like I said, the financial data of the company for quite some time, whereas the earnings report, right, gives you the data on a quarterly basis, right? So these are two different things, prospectus and earnings report. Prospectus, you're getting the data for a long period of time, whereas the earnings report, you're getting the data for a set period of time, right? The last 3 months. So within those last 3 months, anything could have happened, right? And that anything could have caused the stock to soar. The numbers could be immaculate based off of those last 3 months, that last quarter, because this is when companies drop earnings reports on a quarterly basis. So the average investor, the intelligent investor, right, would more so check the earnings report. But if you really get busy, you're going to check the prospectus, because you're like, yo, I want to know what's been going on for a long period of time, for the duration of the time the company has been able to publish this prospectus and how long it's been available to the public. So with that being said, the book value gives you that. And I said, yo, damn, I love that because it will tell me whether the company, right? Because look, it'll tell me whether the company is overvalued or undervalued, right? Because if the book value is trading at 250, right? But the current stock price on the market, what we see when we type it in online, is trading at $50, that tells me that it's trading at a price that's undervalued, right? It's under the book value. The book value is 250. The stock is trading at 50. So what does that mean, beloved? That means that it has the potential to go to what it's worth, the 250, the book value, or even higher. Conversely, if the book value is $50 and the stock is trading at 250 on the stock market, then that tells me what, you guessed it, the stock price is overvalued. So in other words, this just gives you a great insight. This just gives you a different lens to look at, and you're dealing with the real deal. Because the thing about the current stock price, that stock price that you see when you look at the company online, it has things already priced in, even the future. What do you mean by that? What I mean by that is, that's a great question, by the way, but what I mean by that is, when I say priced in, I already know that that's going to take place, right? So if let's say Jordan has a stock, right? Nike has a stock. I know the new Jordan's about to come out, right? And I'm an investor. I know the date that Jordan is going to drop that shoe, that's going to cause the stock price to go higher. So what? That is already taken into consideration today. It's not taken into consideration tomorrow. It's taken into consideration today. And that could cause me, as well as everybody else on this side of the street, Wall Street, to invest into the stock that day, right? That day being prior to the Jordan shoe being released, because we know once that Jordan shoe is released, the stock price of Nike is going to go up. So therefore, it's priced in already. Whereas the book value, it doesn't do. No, you're dealing with what the company is worth right then and there. Straight cut. In other words, you see what I'm saying? So that's book value per share. I just thought that to be very interesting. I was looking for my notes, right? Book value per share, a theoretical estimate of what shareholders would receive if the company liquidated all of its assets and paid off all of its liabilities, right? So that's the other thing. When companies go bankrupt or whatever situation happens with the company, they have to pay off their liabilities first, right? Prior to them paying off their common stockholders. And even the common stockholders will be second on the list. Actually, the preferred stockholders would be the first as levels. Nonetheless, a metric that measures the value of a company's equity per share of common stock. Investors use book value per share to gauge a company's financial stability and underlying value. They can also compare book value per share to the current market value per share to determine if a stock is undervalued, as we spoke about, or overvalued, right? Book value per share is a measure of a company's balance sheet. That's an accounting term. Balance sheet. That's very imperative. Balance sheet, cash flow statement, and income statement. Those three essentially make up a company. I'm going to say it again. Balance sheet, write that down. Cash flow, write that down. Income statement. Those three statements are all accounting statements which make up the company itself. We'll get into that later. So, book value per share is a measure of a company's balance sheet values at a specific point in time, and it doesn't consider the future. Market value is determined by the market and represents how much investors are willing to pay, which can be higher than the book value per share, right? And it's higher because then it can be higher than the book value per share because of what? Because it's dealing with real time. It's dealing with right now as well as the future, opposed to just this set number, this set time. No, we're dealing with everything, right? Listen, heavy on the investments. I hope you could add that to your arsenal. That was just a little something for the streets because we're feeling good. Prospectus and earnings report. Know the difference between the two. Book value and current value. Know the difference between the two. Replay it. Take notes. Heavy on the investments. We're going to load up this year. I'm feeling good. I'm loving it. I'm in the zone. I'm in the element. Stay tuned, beloved.